Welcome to The Explainer. Today we're going to dive into some really strange signals coming from, well, pretty much everywhere, both crypto and the traditional stock markets. We're seeing moves that just defy classic logic, and our job is to try and unpack what it all means.
So, here's how we're going to tackle this. First, we'll get into the central mystery around Bitcoin. Then we'll zoom out and look at the rest of the crypto space, before jumping over to the stock market's equally confusing behavior. And finally, we'll try to connect all the dots.
All right, let's kick things off with the most puzzling thing that happened this week, and it's all about Bitcoin. On the surface, everything looked incredibly bullish, but the reality was something else entirely. On one hand, you had this fantastic news for Bitcoin. Over $500 million poured into spot ETFs from huge institutional players. I mean, this is the kind of buying pressure that should send prices to the moon.
But here's the mystery. Despite all that cash flooding in, Bitcoin's price actually went down. That is the exact opposite of what you'd expect. So what on earth is really going on here? And just look at the breakdown here. We're not talking about small retail buying. These are financial giants. You've got BlackRock, Fidelity, and ARK all making huge moves. That signals some serious institutional conviction, and it looks like they're using this dip to load up.
And this right here is the central paradox. The big money was clearly buying, yet the price reacted as if there was a massive sell-off. A disconnect as sharp is, well, it's highly unusual, and it's feeling a lot of suspicion that some kind of market manipulation is happening behind the scenes.
Now, this strange behavior wasn't happening everywhere in crypto. While Bitcoin was this hive of activity, another major player was eerily quiet. It really was a tale of two very different coins. In stark contrast to all the Bitcoin drama, Ethereum was a ghost town. It saw its lowest trading volume in over a year and even had net outflows from its ETF products. It's pretty clear the institutional focus was all on Bitcoin, leaving Ethereum on the sidelines from now.
Beyond the two big dogs, the rest of the market saw some fragmented activity. A Solana ETF launched, but it was pretty quiet. None of the big Wall Street names were attached. And in the background, there's this growing buzz about potential XRP products, which could be the next wave of offerings. Okay, so this whole counterintuitive logic, it's not just a crypto thing. The traditional stock market is sending its own set of deeply confusing signals, where bad news for the economy is somehow being seen as good news for stocks.
So let's just walk through this bizarre sequence of events because it's really at the heart of the stock market's thinking right now. First, terrible news hits, the highest number of layoffs since 2016. The market's first logical reaction? It dips. A little panic sets in. But then, almost instantly, that fear turns into a full-blown rally. Why? Because the bet is that a suffering economy will force the Federal Reserve to start cutting interest rates, making money cheap again. It's a game of chicken, and right now the market thinks bad news is the winning ticket.
The uncertainty is even clearer in the AI sector. On one hand, you have a massive insider, SoftBank, dumping almost $6 billion worth of NVIDIA stock. That is a huge vote of no confidence.
But on the other hand, you've got industry leaders like AMD's CEO projecting extreme optimism, forecasting tens of billions in revenue from what they're calling an insatiable demand for AI. So who's right? The insider who's selling, or the executive predicting explosive growth?
So what do we take away from all these conflicting signals? Whether you're looking at crypto, stocks, or the AI sector, the single theme that ties it all together is contradiction. The usual cause and effect rules just seem to be broken.
Seriously, everywhere you look, the old rule books are being thrown out the window. What you think should happen based on the news simply isn't what's playing out on the charts. Even traditional relationships are breaking down. When gold and stocks recovered from recent lows, Bitcoin got left behind, which goes against its recent pattern.
And if you look beneath all this surface-level confusion, there are some deeper warning signs. For example, the index for distressed corporate debt, that's basically money owed by companies on the brink of bankruptcy, is climbing. This tells us that while stocks are rallying on pure optimism, the credit markets are quietly flashing red.
And this leaves us with the critical question for anyone trying to navigate this market. In a world with such deep contradictions, are the old rules of investing even in play at all? It's a key thought to consider. If you found this explainer helpful, be sure to smash that like button and subscribe so you don't miss your next daily edge. More news in our Telegram channel in the first comment. See you next time.